This is shocking. I'm your host, Steve Van Metre, and thanks for joining me today. In our show today, Morgan Stanley says the stock market is about to do the unthinkable, and this is why we take a look every week at the technicals, momentum, and machine positioning across the broad equity market, the bond market, the metals, and the currencies, because when you see what Morgan Stanley is worried about, well, we're going to show you how to position yourself to avoid the unthinkable. Plus, we have a sponsor for today's show who's empowering embedded crypto solutions, and we're going to show you a chart setup because their stock is massively oversold. It's sitting on support, and we think it could make a 90% move to the upside. Stay tuned to the end of the show or check out the pinned comment or description for more information. Now, let's head over to Morgan Stanley, where we picked today's story up with a headline. According to their quants, we're on the verge of triggering billions in forced selling. And while hawkish Fed is shaking in the market, an even bigger bogeyman lurks in the shadow, according to Morgan Stanley's head of quant and derivatives, to the point of activating significant forced selling is getting much closer. And this is something we have warned about, that these machines, the way they look at the market is not how everyone else looks at it. They look at it from a momentum perspective. When it's rising, they buy in a big way and shoot the market higher. When it flips and goes the other direction, they turn into massive sellers, because what they're trying to do is capture as much of those gains as they can, which is a smart move. The problem is there's a ton of money in these machines, and here we can see it is arguably a mistake given the potential supply if there's any more incremental negative news. In fact, a selling cascade that results in a 5% drop in the S&P would unleash almost $180 billion in systematic through mostly vol targeting, but also CTA and risk parity selling. Now, of course, we do have our own CTA-Timer Pro program, which looks at the machine positioning, but this is a big concern because a lot of investors, they don't understand that these machines control massive amounts of money. And it's not just Morgan Stanley that's worried about it. Well, it's also Goldman Sachs. And here you can see from their recent report, the seasonals, they were in the middle of the worst seasonal equity period of the year right now. So you look at it from a seasonal perspective, we're in the blackout period. Stocks likely to go down here. The machines just queued up to sell. Since 1928, the median S&P 500 return for the last 10 out of 11 days in September is negative, and that's not what we want to see, because once these machines start to get rolling, well, they accelerate their moves, as we know, to the upside, but also the downside. Here you can see from Goldman, over this week, they're looking at on a flat tape. It means stocks just go sideways. Machines are selling here. If you get a big down move, tack on this to Morgan Stanley. Here's $50 billion to sell, $33 billion in the S&P, and that's some big numbers starting to crop up. Over the next month, in a flat tape, they're net sellers. So if the market doesn't even budge, you're looking at $55 billion to sell, $34 billion out of the S&P, and now down big, $65 billion to sell. So what you see is machines on top of machines selling. There's just so much money that is driven by some form of algorithm, and these are just automatic. They hit their triggering point and they buy or sell based on that. And if they hit more trigger points on the way down, sell, and then go short. In fact, one of the things we see Goldman mostly concerned about is the vol control fund positioning. Here you can see this in global equities. These vol control programs are at extreme levels, and if volatility goes up, so the way they work, as volatility goes down, they buy more equities. If volatility starts to go up, well, they got to get out of those equity positions quick. Creates a feedback loop. As they sell equities, volatility goes up, and then next thing you know, they sell more equities. Volatility keeps going up to sell more equities over and over. And that's one of the dangerous things about this market that a lot of people don't understand. We get into a position of illiquidity, and next thing you know, these machines are driving the tape lower. Let's take a look at TD Securities. Look at this. On their most recent report, under 43.80 to sell on the S&P. That is not good, because as of right now, we close the week at 43.20, meaning we hit that trigger point. So that means they're going to be net sellers going into the market on Monday. So let's take a look at our own position. We know S&P 500 momentum now clearly negative. The RSI is at 33. It's almost at oversold territory at 30 and under. The MACD's got a negative cross. So from a tactical perspective here, you see traders saying, hey, look, there's an opportunity to come in. And what we're suggesting is wait, hang tight. If these machines start to kick in, you're going to get a much better entry point. That's the case we're making today. And we can look at our own reports. We got Momentum Timer Pro, 4 consecutive daily sell signals. We see our CTA-Timer Pro leading the machines from both Morgan and Goldman, as I designed it to do, because we add historical overlay. Again, links to the description of both of these are in the description below. They're very reasonably priced and both come with a 14-day money-back guarantee, so you can try it out risk-free. Here we have a buy it open back on March 30th. We told you hit your stop loss at 436.82. This would have triggered a sale on the opening the other day at 435.70 for a nice little 7.5 or 7.8% gain. We'll keep our upside target. We'll adjust that to the 50-day moving average. Downside target at the 200. Let's take a look at the S&P 500 here and take a look at what we see. Clearly now, momentum shifting to the downside. And sometimes if you don't see it, just move back and change your perspective, because traders right now are feasting on the fact that the RSI is almost oversold, the MACD's oversold, and they're saying, hey, there's an opportunity here. We're suggesting that if you get these machines behind here, they're going to hit that 50 to 200-day moving average. They might even break through that. Then you're looking at a much better setup once the machines kind of exhaust their selling. So if you're on the sidelines now, as we showed you with our trades here, then you're in a good shape. May want to take some risk off the table as we go forward. Let's take a look at the NASDAQ. Momentum negative. RSI also near oversold territory at 35. Now you're crossing the back. The 4 consecutive daily sell signals on our Momentum Timer Pro report, and this aggregates multiple different technical signals on a daily, 1 month, 3 month, and 6 month window. We can show you this thing's been selling on the daily. We told you to buy it open in 366.91. Said the stop loss, we moved it up to that. Guess what? Sold for a 0% gain. It was good because we didn't lose anything either, and that's okay. We're now resetting these positions as we looked to take advantage of the machines going the wrong direction in a big way and pulling things down. We've got our own reports to help us get back in. Upside target also the 50-day, downside 200, making the case again without the share buyback window here. We are in the base case of the market going down. Let's take a look at that. Sorry for not flipping that over for you, but here we can see momentum again on negative, turning down on the price level. It's holding the 100-day moving average. We're saying the bottom here now is as much as the 200-day moving average. So you look, if we get some selling through here, and remember these tech stocks, what are the biggest buyer of it? It's the corporates. They're blacked out. So you get some move here to the downside. That could accelerate right even below the 200-day around 320. This is where you'd want to look to buy after things get exhausted. And again, a lot of traders looking at this as oversold. We're saying the machines don't care at all if the market's oversold or not. All right, let's move on. We'll get the charts right so you can see them this time. And we're looking at the bond market now, massively just got slammed last week. Now we're looking at the 10-year. Needs to get over 110.70. Guess what? It's not even anywhere near that. So the machines, they're sold out. Now we're just seeing other people selling the machines maxed out to the short side. Watch this 110.70 number come down if you see price hold, because the machines are short. They're going to want to hold on to those gains and short cover. Let's take a look at TLT here. Momentum negative. Seeing this kind of across the board. Stocks negative, bonds negative. RSI sitting right above oversold. MACD's got a negative cross. We've got several two buy it opens. Cost basis at 193. We're showing you how to recover from this. No problem. It's down 91.43. Here's what we're going to do. We're going to add on the next move up and continue to dollar cost average that moves up until we see it's at a point where we can make this work. We'll show you the platinum trade as well. This is great if you learn how to do this in case you don't use stop losses, as we encourage all of you to do. Upside target revised down to 92.86. It hit our downside target pretty close. We actually went right through it. Now we're down to 89.15. Major support at 89.15. Let's take a look at TLT here. And what do we see? Let's zoom out to the weeklies and go all the way out. And notably, way down here, you can see that your major level of support is sitting down here. There's at least some buyers down there from before, and there will likely be some now. Let's zoom into the 6 month. We got this beautiful gap open. We know these gaps eventually get filled. This was in the overnight and pre-market trading. So we're looking for a move up here. When our machine positioning says to take the next buy in, we are a go. We'll add that to the list. And of course, you're looking for a move potentially just in the short term up to 92.86 here, not too high, and then obviously a move to tag the 50-day moving average at some point from there. So bonds massively oversold as well, trying to dig out of that big gap down opportunity. You know, if you're out of the stock market, you may want to be looking at the bond market right now. There probably is a better chance there, because in one place you're not seeing it. Well, that's some metals. Let's take a look at gold here. Now we're back at TD Securities, buying above 1950, selling below 1925. And well, we look at gold and it's sitting right at 1944. So we're gonna get no help from the machines. They're kind of in neutral zone here. Let's keep moving forward as we see on GLD. Momentum positive. I'm going to make the case it's not going to last. RSI is at 51. MACD's got a positive cross. Our report, 6 consecutive daily buy signals. So pick that technical move up perfectly. Our machine positioning, you know, it's a 35% long on both. Not too big. Now you go back to the TLT. What do we look for from our machine positioning here? You want to find these ones that are at minus 100%, and we missed right through there. This is what you're looking for. This is our golden signal on our report. When you see these minus 100s, you wait till our fast algorithms flips higher, and that's where you want to go. So we see the machines didn't fully buy into this. We see that with TD Securities. Upside targets 100-day, downside revised big. 169.21 on GLD. Why did I revise it down so low? Well, let's zoom out and see, because here's you got your left shoulder, your head, right shoulder. There's your neckline. It broke it, created a bear trap. Buyers came in, sellers back right at the volume profile line. Buyers in, sellers right there. Sellers know what they want, and they want out of gold, and that's going to take the price down to potentially 169.21. Right down in here is where we're targeting the next level of support, right where that volume is at. This is a topping pattern, folks. I know many of you don't believe it. We're talking about your trading gold. Not talking about your metals you keep in your safe. How about this? GDX, the case moving here, looking at this to the downside. Momentum still remains positive. We're saying that gold goes down. GDX absolutely going with it. 21 consecutive daily buy signals, if you can imagine that. Friday's closing 28.87. We've got no position on this. Upside at the 200-day, downside still at 26.62. Looking at our machine positioning on this, certainly didn't buy in too big of a way. That decent move, but not big enough to hold it. Let's take a look at GDX here. Again, you see a beautiful topping pattern. Left shoulder, head, right shoulder, and then you got second left shoulder, second right shoulder for me. This thing's rolling over. You get down here to support 26. What did we say? 62. That's where you would want to take a flyer if it holds and rallies. Otherwise, breaks that, and this thing's going down in a big way. What you're seeing is liquidations both in gold and in the miners. How about the dollar? Boy, this thing, you talk about something that our reports have nailed. Remember when it was minus 100%, everyone said, well, that's it, dollar's toast. We said, no, wait for the reversal. Sure enough, it happened. It is max long, 43 consecutive daily buy signals. It's maxed out on the 1 month, 3 month, and almost at the 6 month window. So what does this tell you from a position? If you're a trader, what do you want to be looking for now? The dollar moved to the downside, not to the upside. You want to see a reverse here, and that's what you're looking for. Let's take a look back at the charts here and see what we can find from our positioning report. As you can see, upside target is at 29.69, a little higher. It did almost get to that. 29.56 was our target. It got to where it got to almost to 57. Downside target a ways below. Let's take a look here at the dollar and see what we've got going on. UUP, there you are. Look at this impressive rally right up here. I think it could go a little higher. I mean, this is a low conviction trade. This thing keeps going up like a machine, and then all of a sudden it's going to reverse. Look at these topping patterns that form. It's not there yet, but look at that. That's where you want to be trading this to the downside. Massively oversold across the RSI and the MACD, and that is your opportunity knocking to the downside. All right, let's take a look at platinum. Momentum positive on the RSI at 47. Positive cross. We have 5 consecutive daily buy signals on this now, and we added a position. Now you see, we told you before, if we see the machine positioning move, it did. It went from short to long on September 19th. We added a position, 87.35. Didn't really change our cost basis much. Friday's closing about $2 below that. We're looking for a move up to the 100-day. If this thing breaks above, we're probably going to look to get out of it, but we want to see a move higher here. A weaker dollar could help a lot. Next downside, 82.24. And we're just going to continue to dollar cost average, follow the machine positioning until we get a favorable exit point or a big rally. Here we can see, let's zoom in. And where did it buy? Well, it bought right here, this little candlestick up here. We see prices pull back on multiple days of selling. Not a huge move down. We're still looking at a move a little bit above 87. Get to that 100-day moving average. We can book this as a profitable trade and move on. But if that dollar goes down, I think you could see platinum here do pretty well. And something else that we think can do really well, and that is our sponsor for today's show, and that is Banxa. Let's take a look at who they are and what they do, because we think their stock has the potential to make a 90% move to the upside. We'll show you that here in a moment. They're on the TXSV under BNXA and on the OTC at BNXAF. All of that in the description and the pinned comment below. Let's check out this company and then the opportunity, because they're powering embedded crypto solutions as a leading and trusted on-off ramp for Web3. We process billions of dollars in transactions and play a vital role onboarding companies and users to the world of crypto, and you can get on board again on the TXSV, BNXA, OTC, BNXAF, all the information and the analyst stuff all in the description and pinned comment below. Let's take a look at their company that power the world's largest digital asset platforms by providing payments infrastructure and regulatory compliance across global markets, by building the bridge between real world and digital asset world through payment and compliance solutions. Let's take a look at their stock setup here. We've got the supply zones over the last 6 months. We see them drawn in here, and we can see when it gets up into this 80-cent range, sellers show up, drive the prices down. Right now, it's sitting at the volume profile line right around 40 cents, right at support. We see the last time it sits at support, what happens? Buyers come in right underneath here, and guess what? They drive the price up into that 80-cent range. That happens again. We're talking a 90% or an 90% move to the upside from oversold here on their RSI, oversold on the MACD, and that's because this company, well, why do people choose Banxa? They've got the most ways to pay. Zero chargebacks, great risk management. They've got a layer 2 fiat on-ramp, maximized conversions, fast and seamless integration, risk profiling, fraud detection. They've got it all, and they also have a big potential for their stock to move up here. We'll zoom into the 90-day chart, and what do you see? Again, gets up into support here. It gets pulled back down there. You see the volume profile in the 90-day move up to 76 cents, validating that is indeed the sell zone up here. Buy zone is below. Move up there, you're talking 90% move on a real simple trade. Here you can see on the 30-day chart sitting right here at support, we're looking to break through that 51 level where the last wave of selling was, all the way up to 80 cents, and that would again comprise a 90% move on Banxa. Again, on the TXSV, BNXA, OTC, BNXAF, and as always, with any company we feature on our show, you're under no obligation to purchase their stock. Do your own research before buying or selling anything. And with that, I'm Steve Van Metre. Thanks for watching. Thanks for being fans. Bye now.